Members, the House is resumed.
Mr Speaker, the committee has considered the Insurance Prudential Supervision Bill and reports it with amendment. Mr Speaker, I move that the report be adopted.
The question is that the report be adopted. Those of that opinion will say aye. Contrary, no. The ayes have it. The bill is set down for third reading forthwith.
Mr Speaker.
The Honourable Nathan Guy.
I move that the Insurance Prudential Supervision Bill be now read a third time. Mr Speaker, I wish to thank all of those that have contributed to the smooth process of this sensible and well-targeted bill through its parliamentary process. Although we heard a little bit this morning about some political point scoring during the debate of the committee as a whole, but generally speaking, Mr Speaker, this has got very much cross-party support. The collaborative approach that has been taken throughout, firstly by the industry and the stakeholders and their active engagement with officials through the developmental phase of the bill, and subsequently between the industry officials and also the Finance and Expenditure Committee through the select committee process, has meant that overall everyone has made a very valid contribution to the appropriate and effective outcomes that this bill will achieve. The purposes of the bill are to promote the maintenance of a sound and efficient insurance sector and to promote public confidence in the overall sector. The bill takes a number of steps to achieve these purposes. It establishes a framework for the prudential regulation of insurers. It requires insurers to be licensed and that they are subject to prudential requirements. It makes the Reserve Bank responsible for supervising insurer compliance with the bill, and it provides certain powers to the Reserve Bank to act in respect of insurers in financial distress. By taking these steps, the bill will bring New Zealand into general alignment with established international insurance regulatory practice. The bill recognises the diversity and the comparatively small New Zealand insurance market, and it seeks to maintain the balance of the market through the regulation and making sure that it is appropriate in the New Zealand context. We don't want to impose excessive or unnecessary compliance costs on the industry, and overall we need to deliver an appropriate level of regulatory effectiveness. Once the transitional implementation phase is completed, compliance costs will be comparatively light for compliant insurers. The financial reporting requirements contained in the bill, the emphasis on governance and senior management accountability, and on involvement in the process and the outsourced viewpoint of insurers' financial strength from independent rating agencies all contribute to a cost-efficient yet effective mode of delivery of this new regulatory model for New Zealand insurers. The enactment of this legislation will see the repeal of a number of existing outdated and poorly linked pieces of insurance that date back, in some cases, Mr Speaker, right back to 1908. Will remove inconsistent legislative application between the different insurance sectors. In summary, it will deliver New Zealand a current, relevant and international standard model of insurance prudential regulation. From its first reading in Parliament, as I mentioned in the committee stage previously in December 2009, the bill has received wide-ranging cross-party support through all of its stages and general support from those within the industry. This demonstrates clear recognition across the political spectrum and within the industry and the purposes that the Parliament is trying to achieve with this bill. means by which it will achieve these purposes are appropriate to the New Zealand market that it will regulate. Mr. Speaker, I commend the bill to the House.
The question is that the motion be agreed to. The Honourable David Parker.